How to start investing. Whether you have a small budget, or you are planning to invest some savings, this video will have you set to start making your first investments. Before we start, hit that like button, and make sure you subscribe for investment tips every single week. Let's start. In this video, I'm going to present to you the 3 most important assets you can invest in: bonds, stocks and ETFs. After that, I'll give you basic knowledge on how to mix them into a portfolio. Bonds. Bonds are units of debt, issued by a government or a company. Basically, with a bond, you are offering a loan to the issuing entity. As you can imagine, the government bonds are generally safer than corporate bonds. The issuer of the bond promises to pay back the money it borrowed plus any accrued interest. So if you keep the bond till its maturity date, you will get back all the original amount invested, called principal. In case of bankruptcy, bondholders are considered creditors, and are paid before shareholders. This does not keep you 100% safe, but your principal has some protection. Let's move to stocks. Buying a stock, it's like owning a piece of a company, and it entitles you to a proportion of the corporation's assets and profits. Examples of corporate stocks can be Amazon, Coca-Cola and Tesla. Stocks can give greater returns compared to bonds, and carry a higher risk. When you will start looking at stocks, you will notice some with a high dividend. Known as dividend stocks, those are usually larger, and more established companies. On the other side of the spectrum you have growth stocks. Usually start-ups and high-growth companies, which prefer to reinvest any earnings in order to accelerate growth. In growth stocks, you expect to earn money through the increase of value of your share, rather than via dividends. Owning a stock does not guarantee your principal. Let's move on. ETFs. An ETF, Exchange Traded Fund, is a collection of securities, such as stocks or bonds. An ETF share can own fractions of hundreds or thousands of stocks across various industries, which makes them a good choice for diversification and reduction of risk. For instance, there are ETFs tracking S&P 500. S&P 500 gives you exposition to 500 of the largest publicly traded companies in the US. Warren Buffett famously said that for most people, the best thing to do is owning the S&P 500 index fund. Meanwhile, with a company stock, your investment depends on one stock. With just one ETFs you get exposure to a whole set of companies. There are ETFs for tech, pharmaceutical, emerging markets and artificial intelligence, just to name a few. There are also very specialized ETF, for instance REITs are a tool to invest in real estate, with very little investment compared to the amount usually required for buying an actual property. Finally, portfolio. A portfolio is a group of your investments such as bonds, stocks, ETFs and real estate. You want to design your portfolio so that it is appropriate for your level of risk tolerance. When investing, the higher is the potential reward you seek, the more risk you take. You have to find your balance between the risk you can take and the reward you expect. For instance, a safer investor might hold 60% in bonds and 40% in ETF. A more adventurous might go for 20% ETF and 80% stocks. Now you know the 3 main assets you can use to start investing. I did not cover options and other more complex products as they are not appropriate for a beginner. The next videos will cover the 10 most common questions about investing. Add your questions in the comments below. If you enjoyed this video, I would love and appreciate it if you give me a like. If you have questions, or if you want to share your stocks and ETF ideas, put it in the comments below, and be sure to subscribe to get new videos like this every single week. I'll see you next week.